Welcome to Ralph Bivens Project. We're here today in Miami for the National Association of Real Estate Editors 55th Annual Journalism Conference, Real Estate Journalism Conference. And we're really great and very happy and greatly pleased to have Frank Nothaft from CoreLogic, a big data company that has a lot of information on real estate and consumers and what's going on in the marketplace. Frank is very experienced in being an economist. He was Freddie Mac for quite a while, and just he gets it right a lot. Okay, so we're in December. We're thinking, what's going to happen in the year ahead? It's that time of year. What's going to happen in 2022?
Yeah, that's a great question. That's what a lot of people are asking. And I want to say, Ralph, it's great to see you. I tell you, especially during the course of this pandemic, it's great that NAREIT is getting back together and we're able to meet in person. It's been, 2 years since we last met in person. Yeah, way too long. Now, looking into 2022, we still see a really strong housing market. We do expect home sales to rise and hit a 16-year high over the course of 2022. Now, albeit with a little bit higher mortgage rates, so we do see mortgage rates gradually rising, but only a little bit, still staying very low, but a little bit higher than the rock bottom, record low level that we've seen fixed rate mortgage rates at during this past year. So our forecast for 2022, this mortgage rate's up only a little bit, about 30 to 40 basis points, averaging maybe 3.4% over the course of 2022. Now, that's still historically very low, as you know, because when we look at the decade prior to the pandemic, 30-year fixed-rate mortgage rates averaged 4.1%. So even if they inch up to 3.4% next year, historically, really, really low. Higher than this year, but really, really low.
Is it high enough? I guess every time mortgage rates go even a little bit, it knocks somebody out being able to buy a home.
Yeah, well, that's true. So, and that's what we anticipate will happen, that for prospective home buyers, there will be some at the margin where that erosion of affordability that occurs when mortgage rates go up, especially with how much we've seen home prices go up, they'll have to pull out, take a pause from participating in the purchase market. So we see some moderation of buyer demand in the coming year. We also expect to see a little bit more inventory, a little bit more supply come onto the marketplace. And that's why our forecast for home price growth is a moderation in home price growth. Now, as you know, this past year it's been crazy, double-digit price growth. We just released the CoreLogic Home Price Index through the month of October.
A lot of people wait for that.
Yeah, and we've reported that house prices were up in our national index 18% in 1 year, and that was the highest 12-month growth rate we've seen in the 45-year history of our home price index. And as you know, we can't have double-digit home price growth year after year after year unless everybody's income is rising double-digit, and that's not quite happening. So we expect to see some moderation in price growth next year. So our forecast looking out the next 12 months is that home prices will be up in the national index, but only about 3% over the next 12 months. So much, much slower than what we've seen in the last 12 months, and it ties in with that moderation in home buyer demand and additional for-sale inventory coming onto the market.
Where's the inventory going? The inventory shortage has been a huge issue.
Oh, it's a huge issue, and it's not going to cure overnight. We're not going to have ample inventory for sale everywhere, but I'll tell you 3 sources that I do see adding to inventory in 2022.
Okay.
Some of it is coming from new construction. I do think we'll see an increase in single-family starts, single-family home sales from builders. So that's going to be one part of the inventory picture. A second part comes from those borrowers who have been in forbearance for 18 months. Many of them will do just fine. They'll get a loan modification and be able to be successful in making payments. But unfortunately, not everybody. I do think there'll be a portion who will still be under financial distress and will lead to a distressed sale. So we'll see some inventory coming from distressed sales. As you know, over the last year with the foreclosure moratorium, we've had a generational low in foreclosure rates. Well, I do think we'll see an uptick, not a flood of foreclosures, but we'll see an uptick as we get into 2022. So that's a second piece of the additional inventory. The third piece comes from those existing owner occupants who 2 years ago were planning on selling, relocating, moving to another house, but then boom, the pandemic hit. And they said, whoa, wait a second, I don't want to move in the middle of a pandemic. I don't want to have to be looking for a home or having strangers traipse through my house. I'm going to wait till the pandemic's over. So in 2020, they said, I'll wait till 2021 when the pandemic's over. Well, we're not quite there yet, but I think when we get to 2022, now that the majority of the population is vaccinated, booster shots are available. A lot of the population has gotten the booster shots now too. I think a lot of those owner occupants who have postponed and delayed, they go to say, okay, time's right now. I've wanted to move for a year or two already. I'm going to do it now. So we'll see that inventory come on the market in spring of 2022.
It's about time.
It's about time. It really
The
is.
inventory, some places, they do it by months of supply. So some places it's been, one month of supply.
It's
even
crazy.
less,
I've never seen such low levels of inventory in the housing market. And as you know, when we look at the market this past year, what did we see? We saw homes selling very rapidly. It's the highest proportion of homes that we have seen selling within 30 days, and in many cases they sold within days of coming on the market.
Multiple buyers.
Multiple buyers bidding up the price. What we've seen in the CoreLogic data during the summer is that over half of the homes that sold in an MLS, they were selling above the list price, above the asking price.
Half of them. So
Yes.
half of them sold above asking.
It's crazy.
It's good for the sellers, I guess.
That's good for the sellers.
If they have a place to go, they probably have to pay a lot more for the next house they go to, though.
Well, that's true. Yeah, that's the way it is. And maybe some of them had second homes, so they were already in the process of moving to that second home. So then they really benefited.
Now, what about the builders? I mean, I've heard that the builders they haven't built as much as they could. The supply chain issues are heavy. Some of them, I think the latest shortage I've heard of building supplies was windows. Getting windows. I think there'd been an interruption in plastic or in glass. The whole thing. The windows were the hardest thing to get right now. And a house has to have windows. What about that process of construction? How can we increase construction when we have this shortage of lots, labor, and land?
I tell you, you're absolutely right. There have been a whole host of supply disruptions that affected the material going into homes. And of course, lumber costs had doubled a few months ago relative to what they had been, all adding to the cost. And then there are the challenges with hiring and retaining workers in this economy. Home builders are having the similar challenges as so many other companies and entrepreneurs are having in terms of hiring and retaining workers. It's the great resignation in the labor market, and it's affecting builders as well. Some of the supply disruptions come because there aren't enough truck drivers to drive the materials from either the lumberyard or the factory or wherever to the home building site. So no question, there's been a lot of challenges. Our expectation is that a lot of these supply disruptions, as intense as they have been, they'll dissipate. Not tomorrow, not next week, not next month, but over the course of the next 6 months, they'll lessen. And so we'll see more of the supply disruptions go away. We'll see the lumber prices hopefully come down. We'll see the windows available. We'll see the appliances available. And that'll help to support housing construction. But you're absolutely right. Gosh, when we look at the first 6 months of 2021, home sales, housing starts, single-family starts, whoa, way up on a year-over-year basis. And then, we hit mid-year in 2021. That's when the lumber costs went through the roof. Supply disruption started to affect builders. New home sales actually were down in the second half of the year compared to the second half of 2020. I do think that'll turn around in 2022.
I think demand was there, but builders just couldn't build them fast enough.
They couldn't build them fast enough. They had the material shortages, they had the worker shortages, and then of course with lumber costs going up so much, that added $20,000 to $30,000 on average to the price tag on homes. So I think a lot of prospective home buyers said, whoa, they were experiencing a little bit of sticker shock with that.
That's a phenomenal number. And overall, it was 18% price change in 2020, but it's not going to be that strong next year.
No, we don't think so. Our forecast is for slower home price growth in the coming year. We'll still continue we expect that we're going to be reporting double-digit annual home price gains in January, February, March. So it's not like suddenly, boom, January comes and suddenly prices are only up 3%. No, it's not like that. Still double-digit annual home price gains in the first part of 2022, but moderating, slowing throughout the year, so that by the time we get toward the end, the fourth quarter, the end of 2022, we'll be reporting just about 3% rise in home prices in the national index. And again, it'll vary a lot by places. There'll be some places where, home prices will be stagnant or decline. There'll be some places where home prices will be up a lot more. I'll tell you what we're thinking in our forecast. We see the potential of a lot of strength for home buying demand here in some of the southern states, like Florida, like Georgia, like the Carolinas. So we're expecting actually home price growth in a lot of these southern states to actually be above the national forecast. So nationally 3%. I think we're going to see more than 3% appreciation for homes in the southeast part of the U.S.
Well, I know that Austin, Texas, it's so hot.
Oh,
Tesla
gosh.
moving there.
Oh, my
Elon
gosh.
Musk is building a massive Tesla factory, all this stuff. And I believe the latest number I heard was Europe is up 33%. They led the nation at one study has 33% home gain in 1 year.
Yep.
What about our friends in Austin?
So affordability becomes the big question mark, the big issue. So if you've got prices up 25, 30% a year, and if you see it 2 years in a row, gosh, at some point, that affects the ability of prospective buyers to afford or to be able to buy in that marketplace. It's especially challenging for first-time home buyers. So for a first-time home buyer, you got to save up your nest egg because you need to make the down payment, closing costs, have a little bit of cash in reserve after you settle on the home. So you're saving up your nest egg. If prices go up, call it 25% in 1 year, that means for the first-time home buyer, that nest egg that they got to save up, it's got to be about 25% bigger as well. So they got to come up with the money somewhere, to save it, to set it aside. So it becomes really, really hard for a first-time buyer in markets like Austin, where you see that really rapid home price growth.
It is, and I think the affordability issues. Well, you've got inflation happening on this end for all the other household expenses, and mortgage rates will go up a little bit, and home prices are still going to go up. They've gone up a lot, and edge up a little bit. It seems like affordability a major issue facing the country right now.
It's so true, Ralph. It really is a challenge. Now, when the pandemic first began, we saw the mortgage rates drop to rock bottom, record low levels. It actually improved affordability. And the monthly mortgage payment actually was lower for a lot of home buyers and first-time home buyers in those first several months of the pandemic. Even though prices were rising, because mortgage rates had fallen so much, that monthly mortgage payment was less than to buy a similar home pre-pandemic. Now that was true for about the first 8 to 12 months of the pandemic. What's changed over the last several months is the fact that we've had this double-digit rise in home prices. and that's kind of negated the decline in mortgage rates. So if we do have mortgage rates gradually rising, which is what I expect we'll see in 2022, that just erodes that affordability even further, and that's where we're going to see the prospective buyer demand start to diminish.
And you mentioned a few minutes ago about foreclosures, and